The United Kingdom is facing a fresh wave of inflation. New data released this February paints a concerning picture for the UK economy. In January 2025, the Consumer Price Index, or CPI, surged to 3%, marking a 10-month high. This figure surpasses the 2.5% rate recorded in December 2024 and exceeds analysts' predictions of 2.8%. The news comes as a blow to consumers and businesses alike who are already grappling with the rising cost of living. This recent surge is a stark reminder of the volatile nature of inflation. It serves as a signal that the fight against rising prices is far from over. The UK, along with the rest of the world, experienced a period of relative price stability in recent years. However, a confluence of factors has led to this renewed upward pressure on prices. The current situation has sparked widespread concern and debate among economists and policymakers. The Bank of England, tasked with maintaining price stability, is now under increased scrutiny. Its next steps will be crucial in determining the trajectory of inflation in the coming months. The current situation presents a significant challenge, demanding a delicate balancing act to curb inflation without stifling economic growth. The latest inflation figures have brought into sharp focus the challenges facing the UK economy. The situation is fluid and requires careful monitoring. The coming months will be crucial in determining whether this inflationary uptick is a temporary blip or the start of a more worrying trend. Understanding the factors driving inflation is key to addressing the issue effectively and mitigating its impact on households and businesses. Several factors have contributed to the recent surge in UK inflation. One significant contributor is the rising cost of transport. Airfares, in particular, did not experience their typical seasonal drop after the Christmas and New Year holidays. This unexpected trend is likely due to a combination of factors, including increased demand for travel and higher fuel prices. The cost of essential food items has also played a role in pushing up inflation. Notably, prices for meat, bread and cereals have seen marked increases, putting a strain on household budgets. Another factor is the government's decision to introduce VAT on private school fees. This policy change has resulted in a significant increase in fees, nearly 13%, adding to the financial burden on families who choose private education. The introduction of VAT on this service has been a point of contention, with some arguing that it disproportionately affects certain income groups. The interplay of these factors has created upward pressure on prices across the board. The situation is further complicated by external pressures such as global supply chain disruptions and geopolitical uncertainty. These factors continue to exert upward pressure on prices, making it difficult to predict when inflation will ease. The complex interplay of domestic and international factors underscores the challenges faced by policymakers in their bid to control inflation. The causes of the current inflationary spike are multifaceted, demanding a nuanced understanding of both domestic and global economic forces. Addressing this complex issue requires a multi-pronged approach, tackling both the supply and demand side factors contributing to the problem. The government's fiscal policies, alongside the Bank of England's monetary policies, will play a crucial role in shaping the inflationary outlook in the coming months. The Bank of England, the UK's central bank, is tasked with keeping inflation under control. In response to the recent surge in inflation, the BOE has already taken steps to cool down the economy. Since August 2024, the central bank has implemented 3 interest rate cuts, bringing the base rate down to 4.5%. These cuts are intended to encourage borrowing and spending, stimulating economic activity. However, the BOE is walking a tightrope. While its actions aim to curb inflation, there's a risk that these measures could stifle economic growth. The BOE's current projections suggest that inflation will peak at 3.7% in the third quarter of 2025, driven by anticipated increases in energy prices, water bills, and bus fares. Despite these projections, the central bank remains committed to its target of bringing inflation back down to 2% by the end of 2027. The BOE's next interest rate announcement, scheduled for March 20th, 2025, will be closely watched by economists and investors for further clues about the bank's strategy. The BOE's balancing act highlights the complex challenges faced by central banks worldwide in the current economic climate. Their actions must navigate a fine line between controlling inflation and supporting economic growth, all while considering the potential impact on employment and investment. The effectiveness of the BOE's current approach remains to be seen, and its future decisions will depend on a careful analysis of incoming economic data. The coming months will be crucial in assessing the impact of the BOE's monetary policy decisions on the overall economy. The UK is not alone in its struggle with inflation. Across the English Channel, the Eurozone is grappling with its own inflationary pressures, albeit at a slightly lower rate. In January 2025, Eurozone inflation reached 2.5%, up from 2.4% in December 2024. Similarly, the United States is also experiencing a surge in inflation, with the CPI hitting 3% in January 2025, up from 2.9% in December 2024. These figures underscore the global nature of the current inflationary surge, driven by a complex interplay of factors including supply chain disruptions, geopolitical tensions, and the ongoing energy crisis. Looking ahead, economists are divided on the future trajectory of UK inflation. Some experts, like Ruth Gregory of Capital Economics, predict that while inflation may remain above 3% for several months, it could fall below the 2% target in 2026. However, she acknowledges the risk of persistent inflation, which could potentially force the BOE to slow down its rate cuts. The UK government, under Chancellor Rachel Reeves, has emphasised its focus on fostering economic growth and increasing disposable income. Recognising the financial strain on households, the government is exploring measures to mitigate the impact of inflation. However, the effectiveness of these measures remains to be seen, and much will depend on the government's ability to navigate the complex economic landscape. The outlook for UK inflation remains uncertain. While the Bank of England is taking steps to control it, the path ahead is fraught with challenges. Global economic conditions, geopolitical uncertainty, and the trajectory of energy prices will all play a significant role in shaping the future of UK inflation.
You need to watch this if you struggle with finding a reliable ride to work. Commuters, meet Rose Hill Cabs. Imagine this: you're running late for work, and you need a cab pronto. Enter Rose Hill Cabs, your new best friend on the road. Don't take our word for it, just check out these rave reviews on Google. Emily says, Rose Hill Cabs has never let me down. Always on time, and the drivers are super friendly. John agrees. I've tried other services, but Rose Hill is by far the best. Clean cars, reliable service, and affordable rates. What more could you ask for? And Sarah? She's thrilled with the app's seamless booking experience. With just a few taps, my ride is confirmed. No stress, no hassle. So if you're tired of waiting for cabs that never show up, or dealing with grumpy drivers, give Rose Hill Cabs a try. Your commute deserves it. Hit the link in the description to book your first ride. Trust us, you won't look back.